I guess, the oil industry, and we're going to move on and talk about the oil segment. The refinery infrastructure sector facing its biggest challenge to date, that of underinvestment, according to our next guests. Gaurav Sharma joins us. He's a principal analyst at the Infrastructure Journal. Gaurav, welcome. Good to see you. Just explain that thesis for us.
Geoff, thanks for having me on the show. Well, we based our arguments on the number of projects which reach financial close. Now, what we are largely seeing is a general trend, a move away from downstream in favor of upstream investment. Upstream investment carries a high risk, high reward model, whereas downstream investment a little bit more predictable along other business lines. Now, we noticed that of all the projects that we've tracked between 2005 and 2010, there's a general downward trend. That's despite the fact that the price of oil, crude oil, is relatively good at the moment, as opposed to what it was. Now, I pulled out some figures before I sort of came in to see you, and 2006 we had something like $11.37 billion worth of project finance for refineries alone, oil refineries alone. And that has since declined, where we're nearly at the end of 2010, and we've just seen a mere 2 projects reach financial close, and it's like $1.67 billion worth of project finance. That is a massive depreciation in terms of project finance.
The expectation clearly is that these prices are only going to increase from here. Coming back to David's thesis, there could be some shock for the marketplace if we see that dramatic increase in the price of money, effectively. Is anybody trying to put this into their sums?
Well, see, what they're at the moment focusing on is purely on margins. That's the feedback that we get from the market. They look at the projects, they look at I mean, of course, that aspect comes into it, but what they're purely focusing on is on margins, and margins are fairly low at the moment.
Well, that's nothing new. It's always been the case with any of these kind of investments. How has that changed in all the years that no one's invested in any of these things? Very quickly.
It's changed in the last 5 years. It's come down by the margins come down something like $2.50, which is a massive dip, and that has affected project finance overall. Whereas in upstream, it's a different dynamic is applicable.
All right, Gaurav, appreciate you coming in. Thanks very much for that. Gaurav Sharma, the principal analyst at Infrastructure Journal. Coming up, we're going to be speaking to the CEO of Aveva, Richard Longden, after the